Welcome to our special show on GST, the Goods and Services Tax, a game-changing tax reform that will roll out on the 1st of July. 80% of existing taxpayers have already enrolled. Many are doing it now as we speak. So if you've registered, if you're ready, but you still have some questions or doubts about either compliance or paperwork, we will help answer all your queries right here on NDTV. You can send us emails at askaboutgst@ndtv.com. You can call us on these numbers as well. We have a special guest joining us today. We have Aseem Chawla of Phoenix Legal with us in our studios to help answer all your queries. So let's get it started straight away. We have our first question coming in from Dharmendra in Vizag. Dharmendra, good afternoon. What's your question?
Supplier to the distributor or the dealer, right? It is an interstate transaction. So the dealer will get the input completely, the 28% or 18%, whatsoever it is, or how much percentage is stated. That's the question.
So you are a distributor of products that are manufactured in Gujarat and you sell them in Andhra Pradesh, right? The tax rate for the products you sell is 28%, right?
Yes.
And you want to know how much input tax credit can you avail?
Yes. What is the process and what is the modus operandi of that? I just wanted to know.
Right.
Is it because the products which have been manufactured comes under the level of 28%? So if such is the case, I write the invoice, my basic price 28% GST, and supply material to the state of Andhra Pradesh to a distributor. So now that a distributor, how he will take back that input, whether it is complete 28%, CGST and IGST, or how that I just wanted to know.
Right. Aseem, you've heard him. He wants to know how to do the input tax credit. He's selling in Andhra Pradesh. He sources products that are manufactured in Gujarat.
Yeah, so let's understand. GST is a destination-based tax. So therefore, there's a movement of goods from one state to another, the elementary part of it, and therefore this will be subject to integrated goods and service tax, which replaces the central sales tax, because that was the erstwhile tax which had dealt with movement of goods from one state to another. Here we are talking interstate movement of goods, so IGST comes into picture. Now the good question, the good part here which everybody needs to keep in mind on a larger perspective is how to claim the set-offs, because you are talking IGST, so therefore IGST can be first of all creditable against IGST, then CGST, which is the central goods and service tax, and then state goods and service tax. So if I am liable to pay integrated goods and service tax because of movement of goods from one state to another, the ability for me to claim a set-off would be in this particular order of preference, but in this particular illustration it's very clear that IGST would be the impost, the necessary impost in this particular case.
Right, and he can get a credit for the entire tax, 28%
Absolutely,
tax.
Entire, but the order of priority is very important. It is one tax. GST is one tax. Let me qualify by saying it's one kind of tax. So therefore, in one GST you have three elements largely, which is the integrated goods and service tax, which is the second is the central goods and service tax, and the other is the state goods and service tax. So within this one tax, there are three larger components of taxes. So when it comes to set-off of the input tax credit, which is of the variant of input, which is of the variant of integrated goods and service tax, the preference would be to first set it off against any IGST liability, then against any CGST liability, and then against any SGST liability. Of course, it's available for complete set-off, but this will be the order of preference of set-off. This is the larger education which the community needs to know.
All right, we have our next caller with us. Gurpreet is calling us from Gurugram. Good afternoon, Gurpreet. Go ahead, ask your question.
Good afternoon. What I want to ask is, I'm a management consultant, and I pay service tax today at the rate of 15%, both for executive search as well as management consultancy. My questions are as follows. Do I need to pay service tax for this quarter right away and charge GST from next quarter? And if so, what would be the rate of tax for either of them, management consultancy and search consultancy?
Okay, so very simple. The tax comes into effect from 1st of July. So therefore, whatever services have been rendered for the quarter ended 30th of June, pretty much the old regime continues. So please make sure that you end up paying taxes in time, service tax in time. And 1st July onwards, you are of course taxable at 18%. So no problem. Please ensure that your provisional registration is in order, which I'm sure you would have already done, and then after a point in time get your final registration done. And beginning July, please ensure that you end up discharging your GST liability at the rate of 18%. Right.
All right, we have with us Siddharth joining us from Kerala. Good afternoon, Siddharth. Go ahead, ask your question.
Good afternoon, ma'am. I would like to know about after coming the GST, whether the price for cell phone and TV price will go up or will come down.
The prices. All right. So this is about the tax rate on mobile phones.
Yeah.
So I think the basic phones become cheaper, but the smartphones become more expensive.
Yeah. So yes, I mean, if you look at the basic phones, because of the ability to now claim input tax credits on imports in the form of earlier customs duty which you were paying, sorry, and not only that, the excise which you were paying, which is now available for set off. So therefore, earlier the excise was not available as input tax credit for set off purposes. Now that manufacturing is happening of low end mobile phones in India, so therefore the excise, the erstwhile excise would be now available as input tax credit under the new GST regime, and therefore to that extent there is highly likely possibility of the mobile phones coming down. As you rightly said, the high end mobiles are still import dependent. So to that extent, the BCD, which is the basic custom duty, does remain consistent to that extent, and therefore the ability to claim set off of that in the entire value chain may not be as plausible, and therefore to that extent the smartphones might end up becoming
slightly more expensive.
Yeah.
All right, we have an email from Rajendra Belamkonda. He's saying, I'm a dealer in vegetables and fresh ginger. My turnover is more than 50 lakhs per annum. I will be sending fresh ginger from Karnataka to Uttar Pradesh, Delhi and Andhra Pradesh. All fruits and vegetables which I'm dealing with are exempt from GST. Do I have to register for GST? If yes, under what rule?
No, I mean, if I am dealing in exempt goods, then the question of registration per se does not arise. So
even if his turnover is more than 20 lakhs.
Because he is dealing in exempt goods. So there's a difference between exempt goods, goods which are nil rated or zero rated. So if he is dealing in exempt good per se, I think no need of sweating on GST.
All right. We also have another query which has come in from Farah. She says, I am a small seller having an arts hobby. I sell items that I make on online platforms like Craftsvilla, Craftsy, etc. My turnover is not more than 1,000 rupees a month. I have been asked by a website to submit my GST TIN. I don't have a company, I don't have a partnership. I'm just an artist selling whatever I make at home. Why are online sites asking her for a GST TIN? What should she do now? Because her turnover is really low. Yeah,
so Farah should be happy with the newspaper and the news reports which came today morning, where at least the tax collection at source in so far as supplies made to e-tailers, etc., has been deferred for the time being. So 1% TCS, which was proposed or was in the scheme of the Act, has been deferred for the time being. So Farah should write back to the e-commerce compliance team citing today's newspaper, or maybe they might have a different viewpoint for Farah maybe today afternoon onwards. Yeah.
All right. We have Mr. Murthy on the phone line with us. Mr. Murthy, good afternoon. He's calling from Bengaluru. What's your question?
Good afternoon. My question is, I'm an offset printing press. I doubt is because on the HSN code there are different codes that have been given for the printing item. Do I come on that basis, or I come on one tax rate, because it shows as a 5%, 12% and 18% tax on the HSN code different product. But do I come into that, or I have a composite work duty on 18%?
Well, composition scheme is a election by choice in terms of a separate regime altogether. If you think that your turnover is not going to exceed 75 lakhs in a year, then you may perhaps consider availing composition scheme, and in case of manufacturer, the applicable tax is about 2% on composition scheme. But then the composition scheme has its drawbacks in terms of its entitlement to claim input tax credits, etc. So to that extent, you will not be able to claim the output in terms of offset of input tax credits, which you would have paid at the time of availing supplies, etc., for the purposes of your manufacturing, etc. So I think it's a pure accounting economic decision, and of course in terms of ease of doing business, if you think composition scheme for the timing does help you, and the turnover is unlikely to increase 75 lakhs, because remember it was 50 earlier, and the government decided that let's raise the bar to 75 lakhs to provide some convenience, because compliances are few. You just have to do one quarterly return instead of the monthly returns in a composition scheme.
So Aseem, one question he has is also about what HSN code will apply to him. If anybody has a query about the products they manufacture or sell and they're not sure what tax rate applies, where can they check this from? Where can you get the list of HSN codes?
Well, the CBEC website should be helpful, and the GSPs, the GST Suvidha providers can also help, but at the end of the day, remember, the invoice has to contain 16 fields properly so that you can avail your input tax credit. So to that extent, it's not a less onerous task, so to say. I mean, claiming input tax credit requires you to fill in these fields. Of course, it might end up becoming autopilot, after you have done the initial feeding bit, and therefore the system can generate and map it up for yourselves, but the initial V bit you have to be very careful.